Have you seen this? IBRX stock, for months, it was in a total free fall, completely off everyone's radar. Then, boom, out of absolutely nowhere, it jumps almost 40% in a single day. But here's the thing, the real story isn't that giant green candle you see. We're going to dig in and find the actual trigger that told us this was coming.
So how does that even happen, right? How does a stock that nobody was talking about suddenly shoot for the moon? Was it some surprise news? A random market fluke? Or was there a clue hiding in plain sight that a huge change was on the way?
In this slide, this just captures the whole mystery perfectly. I mean, look on the left. That was the story for months and months. A classic, painful downtrend. The stock was just bleeding out, hitting lower highs, lower lows. And then on the right, that happens. A complete 180. It's like you're looking at two totally different stocks. Okay, now here's where it gets really interesting. Your eyes, my eyes, everyone's eyes go straight to that huge green candle, that 39% day, and we think, aha, that's the story. But it's not. The real catalyst, the thing that actually started this whole party, was a much smaller, almost invisible signal that happened before the explosion. You see, the entire shift from totally bearish to wildly bullish didn't begin with that massive 40% jump. Nope. It all started with one specific, single candle that basically flashed a huge warning sign to all the bears that the game was about to change. So let's break down what this one little candle actually did. It completely smashed through two super important technical levels, the 50 period and, even more crucial, the 200 period moving average. And here's the key. It stayed above them. This wasn't just a quick spike. It was a clear signal that the entire market sentiment was fundamentally changing. Which, probably brings up a really important question. What the heck is this 200 EMA line anyway? And why does it matter so much that all the big traders and algorithms pay such close attention to it? The easiest way to think about the 200 EMA is to see it as a tide line for a stock. It just smooths out all the day-to-day noise and shows you the big picture, the long-term trend. If the stock's price is trading below that line, well, the tide's out, it's bearish. If the price breaks above it, the tide is rolling in, and the trend is turning bullish. It's honestly that simple. To be in a real long-term uptrend, the price just has to be above this line. So think about it. When a stock has been stuck underwater below that line for months on end, and it finally decisively punches through and stays through, that is a massive signal that the whole trend might be reversing. And this is the exact story of IBRX. For months, you could just watch the price try to rally, and it would hit that 200 EMA line like a brick wall and get smacked right back down. It happened over and over again, just confirming how strong that downtrend was. Until finally, one candle had enough power to completely shatter that ceiling. Okay, so the long-term trend has officially flipped from down to up. The big question now is, what's next? Where do we go from here? And really, there are basically two likely paths the stock could take. So on the left, you've got what we can call the rocket ship scenario, right? It's just pure momentum. The stock just keeps ripping higher without looking back. And then on the right, you have the healthy pullback. This is where the stock kind of takes a breather, lets some people take profits, and builds a solid base before it makes its next move up. All right, so in that rocket ship scenario, if the momentum just keeps on going, these are the key price levels to watch. The first little hurdle, what traders call resistance, is hanging out around $5.59. If it can clear that, the next big targets come into play at $6.20 and then all the way up at $7.33. That $6.20 level is the first really significant target. It's a price where, in the past, sellers have shown up to push the price down. So if the stock can break through its first hurdle, you can bet that breakout traders are going to have their eyes locked on this price as the next major stop. Now, if this move turns into a really powerful, sustained rally, the next major zone of interest is way up there at $7.33. I mean, that just shows you how much potential room this stock could have to run if the bulls really stay in complete control. But here's the thing you got to know about trading. A straight line up often isn't healthy. It's not sustainable. And that brings us to scenario 2. A stock needs to breathe. It needs those moments where people take profits, where it consolidates, to build a solid foundation for a healthy long-term uptrend. So the more patient, higher probability play, it looks something like this. You wait for all that initial excitement to die down. You let the stock pull back to a nice support level. You watch it stabilize and build a solid base.
And the real entry signal, the confirmation, is when it breaks back above that recent high of 559. That's what tells you the uptrend is real and ready to keep going.
And laying out these two scenarios brings us to probably the most important lesson of this entire breakdown. This isn't just about IBRX anymore. This is about a fundamental mindset shift that separates winning traders from everybody else. You have to learn to think in probabilities, not certainties. And this quote just says it all. In the market, nothing is guaranteed. It is all a game of possibilities. The edge that the pros and the big institutions have is that they don't hunt for guarantees, they manage their risk by playing the odds and focusing on what is most probable. This slide just lays out the two mindsets perfectly, doesn't it? On the left, you have the retail trap, always looking for that sure thing, that one trade that absolutely can't lose. And then on the right, you have the institutional edge, which comes from accepting that sure things don't exist and instead building a strategy around what is most likely to happen. So, what are the big lessons from this deep dive into IBRX? Well, it boils down to three things. First, wait more than you trade. Patience is a hugely profitable strategy. Second, the trend really is your friend, and that 200 EMA is a powerful guide. And finally, the big one. Always, always think in probabilities. Have a plan for scenario A and for scenario B. And so that leaves us with the final question. We've established that the underlying trend for IBRX has shifted from bearish to bullish. The tide has definitely turned. The only question now is it going to be a tidal wave straight up or a series of steady, rising tides?